For more on this red-hot IPO market, let's bring in New York Stock Exchange Group President Stacey Cunningham. Stacey, it's great to see you back at the exchange. We miss being there. Obviously, it's such a huge week for IPOs. What do you say to the skeptics or the critics that are wondering if this kind of enthusiasm for new issues, especially around anything software, feel a little like 1999 bubble-type enthusiasm and mania?
So first off, Sarah, I have to say it's great to see you. I look forward to our next conversation being back here at the exchange. We'd love to welcome you back. It has been a really exciting week. I mean, just to put it into context, September is on track to be the busiest month for IPOs at the New York Stock Exchange on record. So there certainly have been a number of deals coming, and that's coming off of August, which was the busiest month since October 2013. And August tends to be a really slow month for IPOs. What I think we're seeing is a lot of pent-up demand. There were a lot of companies in the private market space that had waited to go public. And in the spring, when the pandemic struck, the public markets were such a great source of capital for companies that could easily and efficiently raise money when they needed it. A lot of those companies on the sidelines that needed cash were forced to raise it at higher prices. And so now they're looking to get out into public and have access to the public liquidity much more quickly. So we started to hear right away from many of them in the spring they want to be ready to get out.
Still, with these huge pops, it has sparked a debate about whether the process underprices the IPO for the issuer. What do you say to that?
I think that companies have evolved and how they're coming public has evolved. They're staying private much longer, so they're much larger companies. That risk that usually gets rewarded to investors for taking that additional risk on their first day really has changed if you think about how companies have changed. So companies are starting to ask questions about alternative paths to the public markets. They're looking for alternatives like the direct listing, like the SPAC, but I think that each company is going to choose what's right for them. So I expect that we'll see various ways to going public. And our goal at the New York Stock Exchange is to give those companies choices and support them with whatever method is right for them. And we're seeing a lot of demand in direct listings and a lot of demand for the direct listing with a capital raise, which is the next evolution of that model.
Stacey, it's good to see you. We of course, all criticized Uber's IPO when its initial move was sharply down, and then people seemingly trying to criticize Snowflake when its initial move was massively up. What is the ideal first day or first week share price response after an IPO?
Yeah, well, I will say I didn't criticize either one of them. I think it's a matter of what a company's looking to achieve and whether or not their public debut met their goals. And so Uber raised a lot of money in a difficult environment. Snowflake raised a lot of money and is looking for the growth over the future. What I do think, when you see 100% pop, it does beg the question, are there better, more efficient ways to raise capital? And that's why we've been working so hard on getting the direct listing with a capital raise as an alternative to offer our customers. And there's a lot of interest in that. I don't think there's a perfect number that companies are targeting, but companies do have different expectations, and they're going to look for models and a path to public that meets their own particular needs.
So what would be the key inefficiency in the current IPO process that you're looking to correct?
Well, for if you're looking at selling $3.3 billion worth of capital one night and seeing a pop of 100% the next day, for some companies, that's not ideal. Very often you see these IPOs that pop and people say it was a great, successful deal. That's wonderful. Companies often say, well, not if I'm the one that sold it the night before. So if you're looking for a smaller pop of 20%, if that's the target a company wants to see, then they might want to consider a different alternative. Or in a direct listing where access is truly democratized and all buyers and sellers can come together, that's where the market prices it and looks for a more efficient price for all investors to participate on a level playing field.
Stacey, I also wanted to ask you about the other big story that you're in the news for, which is New Jersey floating this idea of taxing all trades. And obviously, you and many others have big data centers in the state of New Jersey. You've signaled that you would move those out if such a financial transaction tax passes. Is it really going to be that costly for you? And who bears the cost of this if it goes through?
That's a great question, Sarah, because it's not the exchange that ends up bearing the cost. That gets passed through to the end investor. So while I'm very sympathetic to the states looking to raise money, it's the end investor that actually ends up paying that cost. There was an estimate by Vanguard that a 10 basis point transaction tax, financial transaction tax, would require retirees to work an additional 2.5 years. So it's the end investor that ends up paying that tax. And that's a concern. And they pay it twice, because they pay it in the trade when they execute on the exchange, that market makers are making those prices, and the tax gets priced in there. And then they also pay it when they trade. So it's the end investor that pays. Once we announced that we were willing to move our exchanges, if that's what our customers are asking us to do, and that's really how this works, right? Because it gets passed through, our customers started calling us right away saying, will you move out of to a tax-friendlier state if this happens? And so we're just letting them know that we have the ability to move. We can move. We'll test it with them this month so that they can test out their systems. And if they're asking us to do that, we'll consider it. Once that got announced, I've been on the phone with governors from across the country that have reached out to encourage me to consider their states as having plenty of data center space and power to facilitate exchange operations.